Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin and the risk metric. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So this is a metric that we created a couple years ago, and the idea is to identify how heated Bitcoin is compared to prior moves. Now, there's a lot of things baked into this risk metric, including price, time, volatility. Obviously, volatility is just a carried out from the price, but also the idea of diminishing returns. Because if you did not account for diminishing returns, then you would assume that you could go to ROIs in the short term that are just simply not possible because of diminishing returns. Okay. So the last time we spoke about the risk metric, I believe, on the public channel was probably in 2020, I think, because once the market gets heated, it's a key piece of the premium list, and we are going to be ending the sale on the premium list in about 1 week. So if you want to lock in the lower rate, make sure you do that. We have these risk metrics for a lot of different cryptocurrencies, as well as some other things as well. Now, what we want to do is we want to see, well, how did it perform? How did it perform in this most recent move? Okay. And that way we can identify, well, did it do an okay job? What are some of the limitations of it? What can we expect going forward? Did it make it to the 0.9 to 1 wristband like we suggested that Bitcoin should be able to do because we're accounting for diminishing returns? Okay. And you can see that, hey, we made it there. Okay. Now, this move that we were in was very different than other moves we've seen. And you might look at this and say, well, it looks like, we've hit this major blow off top, according to the risk metric. But again, just like 2013, we could have an intermediate peak. Now, I've said before, I don't think that the next peak for Bitcoin will come as quickly as the one in 2013 did. As we've shown, this cycle is so far, again, things can change, but so far, it's a very expanded version of the 2013 cycle, very expanded version of the 2013 cycle. And so I don't expect Bitcoin to put in a market cycle top this year. So I do think we are in for a cool off phase for a little while where we have to regroup before we can ultimately trend higher. Now, one of the things we can do, because it's hard to see, well, what are these colors corresponding to? Remember, the risk metric goes from 0 to 1, color-coded basically from blue to red. And if it's blue, it means low risk. If it's red, it means high risk, okay? And the idea is to know where you are. Are you in low risk areas or are you in high risk areas? But because it's hard to identify this just on a color-coded chart, we remove the color from the chart and just plot the risk on the secondary y-axis. And this is what it looks like. So you can see that this most recent move was able, in fact, to make it to the 0.9 to 1 risk band. We speculated that Bitcoin should be able to make it there because, again, the metric bakes into it diminishing returns. Now, one thing you might notice, though, is it did not go to the highest risk level on the daily time frame on the same day that Bitcoin actually hit its all-time high. But you have to remember, this just accounts for daily data. Okay, so when we went to 64K, again, some of these things are just wicks, and so it's not fully included. But what you will know is that once it got to around 60K up here, we were in fact able to briefly make it into the 0.9 to 1 risk band. So again, if you're not familiar with this metric, go back and watch some of the older videos. Maybe just search my YouTube channel for Bitcoin risk metric, and you'll probably see like 10 or 20 videos of the risk metric for Bitcoin back when we were over in this area and basically just gearing up for this next move. Now, the general idea is, well, how can you use something like this to navigate cryptocurrency? And the first thing I should say is this is my risk metric, but you can also create your own. And in fact, there's other ways you can create your own. But this is just the one I use. I wanted to make sure it accounted for diminishing returns in it. And I think so far it's done a fairly decent job, even though the day that it went into the 0.9 to 1 wristband was basically that first push to around 60K, not the 64K move. But remember, it only accounts for daily data, daily closes, not hourly wicks. So there were actually, while this only shows it going to the 0.9 to 1 risk band once, here it actually did it a couple times if you account for hourly data. Now, how do you use something like this? How do you use something like this to navigate crypto? Well, you could say, well, hey, I just want to take profits anytime it gets above zero point 0.8 risk. You could do something like that. And just say, you know what, it's made it to this 0.8 risk span for, many, many times. By the way, I should say that this risk metric was developed over here, so we didn't really know exactly how it would play out. I mean, anyone can fit a curve, right? Anyone can fit something. But again, you can see that it was able to capture this recent move in a way that we may expect. But what you could do also is you could identify various buy regions based on the risk metric and sell regions based on the risk metric. If you say want to approach it from a moderate risk tolerance point of view, maybe you buy Bitcoin below 0.5 risk and you start taking profits above 0.5 risk, or maybe you take profits above 0.7 risk and you do something like that. And the reason you might do this is to just identify that we don't know exactly how low we're going to go. We really don't. And we don't know if we're actually going to make it back down to these levels before going back up, or if we'll turn around sooner like we did in 2013. Note that in 2013, we made it to the 0.3 risk band. We actually briefly dipped below 0.3 risk on one given day, but we were able to make it down to about 0.3 risk during 2013 before we actually turned around. So this metric for me is mainly what I use to navigate Bitcoin. Okay, this is mainly what I use. And again, this is a primary feature of the premium list. We have Bitcoin risk metric. We have a total cryptocurrency market capitalization risk metric. We have risk metrics for Chainlink, for Cardano, for Ethereum, for Monero, XRP, Litecoin, Polkadot, and a few others. Also the S&P 500 and Tesla and gold. And the reason I have these is to just identify like what's not as risky, what is more risky, what is not as risky. And the idea is concentration in an asset class like crypto can help grow wealth, but when the risk gets high, it can make sense to take profits along the way and offset that and diversify into some other asset class, even if it's just putting it in stable coins for a little while, which is technically still cryptocurrency. So my philosophy, generally speaking, is never let a good bubble go to waste. I certainly did not expect Bitcoin to go to 64K this early in 2021. But the nice thing, again, is the risk metric doesn't really care what you think will happen. It just shows you what is happening. And then what's more important is how you react to it. So in the future, I imagine we'll go back to these risk levels again, and hopefully that'll correspond to over a $100,000 Bitcoin. My guess is the next time we make it to the 0.9 to 1 risk band, it'll correspond to somewhere between a $100,000 to $200,000 Bitcoin at that time. But one strategy could be a dynamic DCA approach. This is covered extensively on the premium list. But basically, you have X. Let's say you're DCAing into the market like weekly or monthly. Let's say you're putting in X when it's at maybe between the 0.5 to 0.4 to 0.5 wristband. If it goes down to a lower wristband, maybe you raise that. So maybe you're putting in, let's say, $100 here. And then what if it goes down here? Then maybe you're putting in $200. If it goes down here, you're putting $300, and so on and so forth. That way, if the risk goes down and the price is dropping, you're putting in more. But then the same thing applies for the sell. So like you don't want to sell everything if it goes up to a nice little bunny hill like in 2019, but it would allow you to take some profits if it did something like that. So imagine this most recent move only went back up to the 0.65 risk level. That's the idea of maybe taking some profits here, but only Y, not all of it. And again, you might wonder, well, what's this Y? Well, you basically would just add up Y plus 2, Y plus 3, Y plus 4, Y plus 5, Y equals 15Y. 15Y, let's say you have 1 Bitcoin, so then Y would equal 1/15 of a Bitcoin. So maybe when you get to the 0.5 to 0.6 risk band, you sell 1/15 of your Bitcoin. If it goes up to this level, you sell 2/15, this level 3/15, this level 4/15, and then the final level would be 5/15. Now, the way you navigate that can be very tricky. Because you have to figure out if you want to do a market sell or you want to do like some type of limit sell, like a limit order or stop limit order or something like that. But that's more or less fine-tuning it to suit your own needs. But this is generally, I just wanted to show an update on this risk metric because we haven't covered it on the channel for probably at least 6 months now. And I thought doing an update to show how it's performed so far would be somewhat useful. So generally speaking, now the risk on Bitcoin has dropped considerably compared to where it was just a few weeks ago. You can see how quickly the risk levels can change, just like they did in 2019, just like they did in 2017 and 2014 here, and earlier, 2013, and then in 2011. So you see how quickly they change. So if you always wonder, well, how does Ben navigate this stuff? Does it just pull something out of the air? I just use the risk metric to navigate crypto. And there are, I should say that in terms of fine tuning a strategy, there are a lot of different ways that you can fine tune it. For instance, for me, back in 2020, Bitcoin left the 0.5 risk level at around $13,000. Around $13,000. So I stopped buying Bitcoin at $13,000. You might say, well, I mean, hey, hang on a second here. Bitcoin went up to 64K. So why did you stop buying at 13K? Well, for me, it's all about managing my risk. I mean, it's just about, hey, I don't know that it's going to go to 64K. I just buy up to a certain risk level, and we know that the risk levels are dynamic. Therefore, I bought up to 13K. Once it hit 13K, once I hit the 0.5 risk band, it's not that I stopped buying crypto. I just started focusing more on buying Ethereum and Cardano and Polkadot and Chainlink. So it's not that I stopped putting money in crypto once Bitcoin hit the 0.5 risk level. It's just that, okay, I realized I loaded up on Bitcoin below 13K. Now I'm just going to let it ride for a while and take profits along the way. Now I'm going to focus my DCA buys on other assets like other cryptocurrencies, which I already had positions in before that time, but now I'm just going to solely focus on them now that Bitcoin's going on this crazy move. That way, I'm not buying Bitcoin at these crazy levels and getting scared if the price drops. So I mean, even if the price drops down to 20K, I mean, first of all, you can tell I would have taken a lot of profits on this move, according to the risk metric. But even if I didn't, right? Even if I didn't take profits, or even if you didn't take profits, stopping at a certain level in terms of buying based on the risk metric, then it doesn't really matter if you get these 30 or 40% pullbacks or 50% pullbacks in the market, because it's still relatively far above what your cost basis would be, assuming you were buying when we were fairly undervalued. So from here, as we continue to navigate crypto, I'm not going to do that many updates on the risk metric on the public channel, just because it's a core part of the premium list. But I do want people to get an idea of what is on the premium list, because some of you guys are probably like, what the hell is he doing on the premium list if he's putting out all these videos on the public channel? This is one of the main things. It's basically how I navigate crypto. The public channel is looking at all the trends. The private channel is how I navigate it, and we have a whole risk dashboard and an app that people use to identify what the risk levels are on the various different cryptocurrency assets that we cover. If you don't like this strategy and you want to be super risky, you could buy up to 0.8 risk and say, to hell with it, to hell with risk. I'm just going to buy Bitcoin until it goes up to the 0.9 risk band, and then maybe I'll take profits. The nice thing about it is you can tailor it to your own risk tolerance. I mean, someone who's about to retire probably has a lower risk tolerance than someone who's in their early 20s and is just looking to make it big. So it all depends on what your risk tolerance is, and that way you can tailor it to your own risk tolerance. For instance, I know some people that only buy when it comes down to these levels, and then they only sell when it goes up to these levels, which is not a bad strategy. I mean, it takes patience. It obviously would entail missing out on some moves. Like in 2013, if you had waited until this level, you would have completely missed the boat. You would not have bought back in on this 70 or 80% drop. And that's why, for me, I like to come back in slowly. That way over here, I at least started to come in, even if I didn't get an entire position that I wanted. I would at least started to come back into the market. This is an interesting chart. This shows the risk versus the price of Bitcoin, and you can kind of see how it forms these little loops, and how we've come back down significantly over the last few weeks. Now I think the question is, do we turn around in this level, where we turn around in 2013, or do we go back down to these levels, which would be much further down than we currently are? And of course, you guys know my thoughts on comparisons to like the 2013 cycle and the idea of a lengthened cycle for the current market cycle of Bitcoin. So hopefully this was an interesting video. Again, if you've never seen this stuff before, just search my YouTube channel for Bitcoin risk metric. We had probably a video every month on this for months and months and months. And we said, once we get past a certain risk level, we're just going to keep it to the private, to the premium list, so that there's value there. But anyways, make sure you guys subscribe to the channel if you like the content. We'll of course try to follow the risk metric off and on, mostly just for the private channel. But this is what, if you're always wondered what is the private channel about, this is a lot of what is covered in trying to identify where the risk is of an asset. So if you want to check it out, make sure you check out the premium list. You can find a link to the sale. We're going to stop the sale in about 1 week, so you can lock in the lower rate if you want, and then we'll gear up for whenever the next move is, sometime later on this market cycle. Thank you guys for tuning in. Make sure you subscribe to the channel. Let's go for 450,000 subscribers. Give the video a thumbs up. Click the bell icon to turn on your notifications. I'll see you next time. Bye.